Hey there, it's Matty Miller with ERA Real Estate, and today you're going to see me joined by a special guest, David Lashbrook of Navigator Mortgage, and we're quickly going to talk about rates and our current market situation and kind of what we see going forward, and also buyers and sellers' reaction to what's going on in the marketplace. So, Dave, I appreciate you joining us. I hope you're doing well. You got the ZZ Top look going on there with the guitars in the background. I always appreciate it.
That's the way to do it. Good to see you, Matt.
Yep, good to see you too. Thanks for joining me. And we were getting into a conversation yesterday. We were talking a little bit, just kind of about, more so, rates are obviously going up a little bit in regards to, like we talked about yesterday. Two guys were getting 2.75, 2.5, somewhere in there. However, we're seeing climb up to, like you said, what, 3.2,
low threes. Yeah, it varies. Our highest point recently, it's been 3.2, 3.3. Right now we're down a little around 3.1, something like this. And of course, every scenario is different, but we're just talking in generalities.
Sure.
So a little bit up from the lows that we hit when COVID was in full swing and everybody was in, massive fear factor. And so, yeah, up a little bit. Still, in terms of the last, 40, 50 years of history, interest rates are fantastic. Anytime outside of the last year and a half, the lowest you ever could have gotten on a 30-year fix would have been around 3.1 or 3.2, something like that. Like if you got the all-time lows.
Even so back in 2017, 2017, 2018, pre-COVID, you were getting 3.5, and that was pretty good.
And within the last 5 years, we've had times where we were in the mid fours. So, which is still really, really low. And, compared to I got into this business in the early 2000s, and everyone was really excited the first time that they could get a rate that started with a 6. Like you were talking 6.75, and people were so excited because they could get rid of their 8 or their 9. And so a little bit of perspective on that, like, wow, you can get a 3. Wow, you could get a 3, a low 3, and it's fantastic.
And for people to understand that, the lower interest rates obviously increases the buying power for the buyer. Almost, I tell people all the time, the price of the home, while it's not irrelevant, you have to take into the affordability and the payment aspect of the home. And that's kind of what I talk about, is more so payment rather than price. Hey, what's your,
correct,
based on your income, here's what you can afford. Do you want it to be 20%? Do you want it to be lower than that on your mortgage of your income? So those are the conversations we're trying to have with people, and trying to have those conversations kind of leads me to my next point of, buyer reaction to, oh my gosh, it's at 3.2 now, I'm going to wait. Like, probably not a great decision, I don't think. And kind of let you run with that. More buyer psychology in the market and kind of how people are reacting to what's going on.
Well, yeah, I think just in general, in our environment right now, there's a lot of fear, there's a lot of anxiety, there's a lot of tension for a variety of different reasons. And that certainly I've seen spill over into the housing. People are seeing their budgets, tighten up due to rising costs of all kinds, housing being one of the biggest costs for most people's monthly budget. But also you've got food, you've got energy, you've got all those things as an input there. And so
Christmas presents, Christmas presents, everything's more expensive,
never light on the wallet by any means. So when you have all those things, you do have a lot of anxiety, you have a lot of fear, and you couple that with a home purchase, which is typically the largest or one of the largest financial decisions that anyone makes. People can get a lot of anxiety. And that the big picture, if you look at, well, I was going to buy, last summer and I couldn't find a house, or my offers didn't get accepted and the rate was 2.75, and now I'm looking at 3.25. Well, that's going to be a payment that's a little bit higher. There's no two ways around it. It is. And probably the home prices went up a little bit from where they were in the summer. Not a lot in that short amount of time, but a little bit.
I remember sitting here having a conversation almost a year ago, probably with you or one of my other lenders that I deal with. And like, hey, how do you overcome somebody who's going, prices are rising like crazy, we're nearing towards a crash? And the answer to that a year ago was, obviously, looking around, the answer is no, we were not. It was, probably an inflationary reaction when rates got low. prices got high. Florida being one of the number one states that people are moving to, obviously had something to play with that as well. So there was a lot of other factors that I think people, I hear people talk all the time. How are we going to get through when are the foreclosures going to hit the market? And I'm like, they're not.
If they do, I would say thank God, because we need the inventory. They would sell like hotcakes.
Yeah, and I read some stuff the other day that 0.01% of all properties that went into a mortgage modification actually went to foreclosure. So it's a very small amount. People had the money to pay their mortgages. They just chose to do a modification with COVID. So it wasn't a situation where most of the people, at least in Florida, I can't speak to other states. That's not my thing, but at least in Florida, people had the ability to pay their mortgages and they chose to do a modification and they got caught up. And whether that was through assistance programs or whatever the situation may be, our housing market's pretty stable the way I see it right now.
Yeah. And the other thing that's very different from the last crash in 2008 is that most of the people who are going into those modifications and that sort of thing have a significant amount of equity, and people with equity don't let their homes go into foreclosure. If they have to, they sell. And sell with a discounted price if the home is in rough shape or something like that. But they sell because they're not going to just leave $100,000 on the table for the bank to take because they don't feel like,
makes no sense for them personally.
Yeah, exactly. So, self-interest can be extremely useful in preventing some of those issues. And this would be one of those cases. So I don't see a whole lot there. I think most of the rising prices is due to a supply and demand imbalance. We've got more demand for houses, and that's due to demographics, household formation. Like you mentioned, a lot of people moving to our area. And overall, that creates a large demand, and we just haven't built enough houses. Coming off of the last crash, it kind of put the brakes on all of the new home construction for many years because builders went out of business and got burned and lost money and all of this. And there was a big glut of inventory at that time to burn through. And so while that inventory was still on the market, people weren't building new homes. And now all of a sudden we're behind.
7 years of builders not building homes, basically like this is happening now because of the actual crash that we had, back in 2008, 2009.
Precisely.
So it's a ripple effect for sure. So, and I think one of the things we talked about, the way we see it, because of the shortage of inventory, we still think that the market's going to be very strong throughout 2022. As a seller, I don't think it'll be quite as frantic as it was in 2021. We haven't seen it yet. I could be wrong, but it creates a lot of added stress. And I think we had almost what I would call buyer fatigue happen a lot in 2021. I had a lot of people that were looking to buy homes that are just like, I can't deal with this. I'm just going to stay where I'm at. I'll rent for another year. I'll do this. I'll stay in my current home because I can't find anywhere to go. And we just want people to understand that, like, there are options. Number one, we talked about this too, get with a lender who's going to explain your options. Because if you're selling a house and buying another one, there are options to be able to do all sorts of things. To be able to get that handled. And then obviously, having an experienced agent on your side to, guide you through that process. Cause I've done multiple double closings over the years, and it's not impossible. You just have to get some, got to get some advice because it's not easy. And I don't want people to be scared of that either. I just want them to, I think our job is to tell people out in the public that, hey, it's doable. But you need to get somebody who's done it and, has delivered results and all those fun things. So, we've done a couple together, obviously, and it's worked out pretty good. So, and that's the thing that, having somebody be honest with you. I think you had a conversation about one of your potential buyers that kind of got swindled a little bit, I guess would be the proper term.
Yeah, they didn't get too far in it, but it was a matter of, we're talking about rates, and I'm, telling them the rates in the 3.1, 3.2 range. And, they go dark for a couple of weeks, and I followed up with them and said, hey, where are we at? And they said, oh, we found this other offer. I think it's going to work out better for us. And it's like, okay, well, I'd love to take a look at it and see the details and see what it actually looks like. And it turns out that this other lender said, hey, I'm going to do, 2.599% for you. But they didn't give the detail on exactly how much they were going to charge in lender fees to get that. And it wound up being like $7,000 more than mine to get them that rate that's a little bit lower. The rate is lower. It was going to lower their payment by about $87 a month, but it was going to cost them $7,000 to do it. So that's like, it was like over 80 months to break even just to get your money back of what you paid. When I explained that to them, they're like, oh, we didn't understand. We just saw the lower rate and thought this was a great deal. I was like, well, the devil's in the details. So there's a lot of that kind of stuff going on. And
especially as people are trying to get, lenders and all that stuff, because, most lenders aren't doing as many deals. So they're willing to do whatever they need to do to get it done. And most agents aren't doing as many deals. So there's becoming some shady practices, at least in my explanation of things. That really makes me angry as a professional in our industry. And I'm sure it does the same for you.
Yeah, for sure. Like the last thing you want to do is see, people's anxiety and stress used against them to, trick them into something or lead them astray. Not a good scene. But like you said, when times get tough, sometimes the unscrupulous who haven't built good relationships based on honesty and dependability are doing whatever they can to get somebody in the door. And sometimes that means being less than upfront with them.
Correct. Yeah. And that's one thing that I've always prided myself on, is try to give everybody as many options and give them all the details and answer all the questions that they have and compare them. I'm not afraid to lose a deal, but if somebody's going to help them out more than me, hey, it may not be a great fit, but at the same time, if somebody's got a deal that I can't beat, fine, so be it. But at the same time, don't, it's those issues.
Apples to apples.
Repeat business matters to me.
Yeah.
So
for sure.
Yeah. But, well, I think that's pretty much it. I just wanted to quickly touch base with you. I think we had a great conversation, just talking about, kind of what to expect going forward as well. And if anybody has any further questions, feel free to reach out to me or Dave. If you don't have Dave's number, hit me up. I'll get him to you. And other than any final thoughts, Mr. Lashbrook?
Here would be my final thought: is keep, as with prospective buyers and sellers, keep the big picture in mind, like what you want to do. For most people are not real estate investors. They're homeowners. They're buying to live in, and they're selling to go, move on with their life, whatever that means. And so don't let the numbers distract you from the big picture, because a $10,000 difference in your sales price is going to work out to $40 or $50 a month in your monthly payment. So if you have the right house that checks all the boxes, it's in the neighborhood you want and all that, and you have to go a little bit more than you're comfortable with, and it means an extra $50 a month. Well, okay, go a year without cable, make a decision, make a choice, fit it in your budget, do something. On the same hand, if you're selling a house and you think you can get 10 grand more for it, but you've got a buyer that's ready to go that, is willing to pay a little bit less, do you need that extra 40 or $50 a month? Like, sometimes making it happen is more important than getting every penny out of something. And so just backing up from those numbers, because home price numbers are always, bigger than just about anything else that people deal with on a regular basis. So don't let that distract you from like meeting your family's goals, doing what you need. One of the most expensive things that you can do is buy the wrong house to save a few bucks. Like, I can't tell you in the past 20 years of business how many times I've sold somebody a house and it's been, they've made the decision based on the finances of it. And then a year and a half later, they're like, well, we got to sell. We got to go buy a new one. That is expensive. That is way more expensive than spending an extra 10 grand on the first go.
I love those people. They need people to list their houses, man. I love those people that want to move every 2 years. It's great for me.
Yeah. Oh yeah. It's great for us.
I'm kidding, but I really don't want people to do that.
We could have saved a step, guys. We could have saved a step. So
exactly.
Yep.
Sure. So, all right. Well, I appreciate it. And I'm sure we'll talk soon. And like I said, if anybody has any questions, you know where to contact me, and I can always get you hooked up with David as well. So David, have a great holiday season. Have a good Christmas, New Year's. Thanksgiving's already passed. So you're a hunter. Did we get anything good?
I got one good buck this year.
One good buck. Okay.
One good buck.
I expect some good venison
So
meats over in our office here when that thing gets processed. So
we'll work it out.
All right.
Good.
Sounds good.
Thanks a lot.
Appreciate it.